Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look at the gold market. So here we see unprecedented rally that has happened last week on the background on the conflict in the Middle East. So the scale of this rally, as you can see, is so big that actually it's more representative to take a look at the high time frames on the weekly and monthly chart, where to see where we're in the big picture. And current performance, especially since this more than 2 weeks until the end of the month, it might be really decisive from the technical picture as well. Just to mention some moments, for example, the rally has started precisely from the yearly pivot point. Those of you who read our weekly reports, since we prepared the monthly analysis, weekly analysis, so you could see the charts and it will become evident. And standing on the market above the yearly pivot, it indirectly suggests keeping of the long-term bullish sentiment. Besides, market stands in a place where actually it stands very close to reversal type of action on the monthly chart. We already have huge morning star pattern on the monthly chart, but we also could get the bullish reversal swing here, bullish reversal month on the monthly chart. And it also might be, as I call it, 2-bar stop grabber. It mostly, my experience tells us, works mostly in the same manner as a common stop grabber, but it just takes two candles to be formed. First, when the market changed trend to bearish, and then fast return back up, and it turns back to the bullish. And I saw previously many times that this combination works absolutely the same as a common stop grabber. So that should the few moments that we have to keep an eye on by the end of this month. But already right now, since we have the big pattern on the weekly chart, and this is, as I said, morning star on the weekly chart, this is also huge regardless triple to buy. We have the bullish context. Currently, it's a different question how to deal with the absolutely tremendous overbought on the gold market. So obviously market right now ignores all technical factors, it's taking the back seat. But definitely what we could say is that we need to keep an eye on some pullback, and any dip that will happen, we should consider it as a chance to go long, let's take long position. Major confluence already has been broken, and we have only last level here, it's 1975. But maybe as maybe tensions will get some relief, or market will just turn attention to some other topics. But as you can see, it's coming to some kind of the 50% level of the whole downside action. Well, theoretically, market could start to pull back, and at least here, the one pattern that we could consider is might be kind of the hand and shoulders or something of that sort. So approximately an area around 90 even, 1890, we need to keep an eye on. So on the follow time frame chart, you could see that we have the support cluster right around this level. So we have a kind of the confluence, and there's actually 2 levels, stands very close. So this is around the 1890 is really significant support cluster that potentially might be considered for taking the long position. That's what we intend to keep an eye on. So on the hourly chart, we have also really great thrust up. But I am not sure that in current environment it makes sense to trade any bearish reversal patterns. For example, if double repo sell will be formed, probably I wouldn't take part in it, just because of the overall environment on the gold market and the geopolitical situation. But for example, we could use it to identify where the pullback might start. So if market will form the double repo and pullback indeed will start, so it means that whereas we're also coming closer to the moment where we could start considering taking long position as market starts approaching to some of these levels. Additionally, based on the thrust, we also could consider Brent bottom. Brent bottom might be traded, it's just because it stands in the same direction as the thrust stands. So for instance, if we will get some pullback here to the fib support 1908, for example, it's very big chances that market could show the bounce or even upward continuation. So from that standpoint, the bread and butter is relatively not really risky for trading. That's actually a few moments that we could keep an eye on. So since we're mostly using here the technical factors, and technicals tells us that it is a bad idea to take in long position in the huge overbought where gold stands right now. So the common sense tells that we need to wait. The other question is whether this pullback happens or not, because currently market is driving by the factors that we can't predict, and we don't know what could happen tomorrow, for example. But we need to follow just trading plan using the common sense and using the entry points and general approach that minimize our risk. And something tells me that buying right at the record overbought condition, it's not the combination that reduce our risk. So I would better miss some upward continuation rather than to get some really strong action against me. So from that standpoint, I prefer to wait for a pullback here to the levels that we have specified. But of course, you could use absolutely different tools that maybe could give you some really chances to step in and minimize the risk of some other ways. So maybe you use some specific patterns or something else. So if you have some background that lets you to, in the current situation, take the trades with the acceptable risk level, of course you could also follow your own trading plan. I'm just using the tools that actually I'm using. So from that standpoint and based on these tools, I need to wait for the retracement. So that's our view on the gold market right now. So let's keep watching and see how it will go.